go ahead whenever you're ready. Hopefully won't need mine, but
Okay, here we go. Howdy, folks. Welcome to the Daily Coin. My name is Rory, and today is Monday, March the 30th, 2020. And my name is Rory, and you're looking at Chris Marcus there with Arcadia Economics. And we are following up on the conversation that we started Saturday or Friday, whenever it was we talked a few days ago. About the market in your new book that is just now being released. We're going to get into that in just a minute. But the smash, Chris, that happened, that began last night, as soon as the market opened, it went up and then abruptly went down. And now it's on the downtrend. I haven't looked at it in the last hour or so, but it was the charts are pretty ugly. And the funny thing is, Chris, this is I know you're aware that I've interviewed Alistair McLeod and James Anderson over the course of the past few days, and all we've talked about are these broken supply chains. That's all anybody's talking about. The refineries are closed, the mints are sold out, the mining industry is the mining industry for the past 10 years. How can gold and silver still be going down in light of all this?
well, the answer is pretty simple. It may not be what people do or don't want to hear, but as we've learned in the past decade, 12 years, I think it goes even farther back than that, but you have a market where you can sell paper gold, you can sell paper silver that you don't have to deliver. When you actually think about how the dynamics of a trading floor work, and my background was trading equity options on the New York Stock Exchange, if someone comes in with a bid, let's say Fed says QE5, and theoretically people are buying metals, bid for 1,000 contracts. If you don't have to deliver it, you can sell it. Bid for 10,000 contracts, sold. Bid for 100,000 contracts, sold, which unfortunately is exactly what happens. And let me see if I can get my gold or silver charts up here.
Okay.
But what I found was interesting. Again, you saw this last night. Maybe I'll skip the chart just to stay a little focused. But gold actually rallied on the open. You see there was a big spike up.
Yep.
Actually, you know what? We'll see if we can get the chart here just to show that. Which,
it went up like $15 or something immediately.
Yeah, you see there it closed 1628 on Friday. It was above 1640 and then gets pummeled down, rallies back up. All in all, a pretty volatile day, which, do I think that is what happens is legal or is fair or is in the best interest of integral markets with freedom and honesty? No, I certainly don't. Yet I do my best to stay focused on what is and how we can respond. And to me, it's interesting just seeing these swings up and down. Was not quite as much the case in silver, where, as you may be aware, silver often just goes straight down. You skip the up phase.
Right.
Yet I don't think it's a coincidence we're seeing volatility right now because you have a surge in demand for physical metal. Refiners are getting shut down. There's a lot of debate. Are we out of metal, or are we out of metal in the form that it needs to be delivered in? I could probably give you an argument for both cases. Yet it's not an accident. LBMA liquidity announcement last week. So you're seeing, I wish I knew how close we were to the break point, but we've clearly entered a new phase. And with the Fed printing, $625 billion last week, not surprisingly.
Yeah, it's a joke. I want to show you this headline. This is what I woke up to this morning. And it's I was like, okay, surely to goodness these things are going to turn around. Let's see if I got it pinned. No, it was, I found it over at Gold Core over on Marco Burns. Right there. Epic gold bar shortage globally. Credit Suisse tells clients do not bother asking. So how is that even, how can we have this type of a situation with physical gold being, they're telling, Credit Suisse are telling their clients, don't even ask us about it. We're not interested in delivering or even having a conversation about physical gold at all. I mean, and there was, and I looked up, if you go to the US Mint right now, or I'm sorry, APMEX, I went to APMEX, and in the article that I published yesterday, I had three different images. One from the U.S. Mint showing Gold Eagle proof at 21.75. I went over to APMEX, and there was a Gold Eagle. If you pay with a credit card or PayPal, is 21.19, and Gold Buffalo is 21.33. Pay with a credit card or PayPal, which is what 90% of the people are going to be doing. And anyway, most people aren't going to be, most people, like, you know, all the people that are, most of the people listening to this conversation, that's how they would be paying for it. So it's not a question of, I mean, did those numbers settle well with you? 21.33 for a Go Buffalo, not 16 or 15, whatever the nonsense is that the COMEX is trying to sell.
Yep.
I mean, that's a huge disconnect.
Yeah, and that's exactly what you would kind of expect in times like these. Reminds me of, again, being on the trading floor. This was back on the American Stock Exchange in 2007. And you'd basically have the entire trading day go by. I thought my P&L was whatever it was. And then in the last hour, the market was going to move up or down 500 points, where you got to remember, most of the people that are trading this, I'm not trying to be a smart ass when I say this, but your average Wall Street trader just is looking at everything the Fed's doing as normal.
Mm-hmm.
So there's a lot of confusion out there, and I would assert that the people setting the price understand this far less than you, Rory, or you, the listener, who are hearing this right now. So yeah, you're going to have chaotic markets. It was interesting. I read an article last week about the LBMA where the bid-ask spreads had widened. It looks like some of the market makers had stopped offering markets or widened them out considerably. And that was kind of what happened when there was a flash crash or something. You widen out your quotes because we're all finding it out as it happens. When is that break point? Obviously, it was not this morning, but Rory, like you pointed out, and I don't know if that Credit Suisse story, was that saying that just if you wanted to buy gold, don't ask them, or was that to customers who actually have gold stored there and wanted it back, don't ask them? Which of the two was it?
If you're buying.
Okay. Although I'm sure you saw ABN AMRO last week came out and said, if you have gold, you have until the end of the week to sell it, or they're going to sell it at whatever market price, which, gee, that's, I don't know, maybe somewhere in the fine print they actually offered to return it. I'm kind of doubting that. But you see where it's heading. And folks, you know, I know there are a lot of you have been watching Rory's show for years, and a lot or other shows where sometimes it sounds like a broken record. Yeah, there's a mismatch in the metals. I've been hearing this. Yeah, one day the Fed, this and that. This stuff is happening now. It's
Live.
happening now. And I certainly, by all means, as someone who has lived through it with you, I understand we want date X to be here and certain things to happen. Yet, you know, these things are happening now. And I mean, perhaps the biggest sign, like we said before, 625 billion in a week. The Fed can't even put a number on how much they want to print. A lot is happening now. When we see the metals move, I tend to think it'll be sooner than later. But
now, when you say see the metals, you're talking about the paper illusion, COMEX, nonsensical movement. Is that what you're referring to when you say movement? Because metals are moving at a pace that the dealers can't keep up with. They're all sold out, or they're a couple weeks behind in delivery, and with the refineries now shuttered. And when I wrote an article, as I wrote an article yesterday about that, there was still no announcement. I haven't seen an announcement this morning about the refineries reopening. They were supposed to reopen on the 29th,
Mm-hmm.
and today's the 30th. I haven't heard anything. Have you heard anything?
Not yet.
There you
Although
go.
I did find it interesting, Trump had talked about returning the country to some level of normalcy around Easter, which he pushed back last night to the end of
Yep.
April. I was confused if this virus is as reported, how it would be okay to undo that by Easter. But nonetheless, Rory, you're completely correct. We're in fact, people want to say, when is the physical market going to decouple from the paper market? It started happening, because if you actually want physical silver or physical gold, you were just talking about the premiums on the gold, silver, the premiums are high. I believe some shops still have some availability, but a lot of products getting back ordered.
Yes.
And ultimately, to me, it comes down to, you have one of two scenarios, or maybe there's a whole bunch of other ones. But again, is it A, that you can't get, the mint got overwhelmed, so they need to go find the next chunk of silver. It's going to take them some time to print in the silver maple leafs to the silver eagles, and it's a bottleneck delay where you have refineries shut down. So there are the components of the virus that is affecting life. So is it a matter of just the virus making things difficult, or have we reached the point where that next pile of metal to meet the surge in demand is not there? It's kind of hard to say which of those two cases it is, yet you have an interesting dynamic where you've had a surge in demand. And also, was interesting, was listening to an interview with Keith Neumeyer yesterday where he mentioned that 25% of the silver supply has gone offline, whether it's companies just deciding, hey, it's not safe, or several countries outright saying you need to close down what you're doing. Excuse me. So you have really, in a very bizarre way, a perfect storm where demand is surging, supply is offline. Now you have a natural disaster, maybe an unnatural disaster, perhaps for another day, but you have this virus going around where businesses are getting shut down. So, gee, if there was ever a time for a break point in these metals, sure seems like we're on the field, if not in the batter's box yet, but coming out
Yeah.
of the bullpen, or
Definitely on deck.
yep.
It's
And Rory, if I
but
may add one other thing that
sure.
maybe answers the first question you asked me. Sorry, I'm a little slow sometimes. Yet
All good.
one of the things that we heard was that, because you asked why is the price falling while demand is surging, and what's the most common answer you heard to that one?
Well, the reality of it is that the markets are rigged. I mean, that's whether or not the corporate media is never going to say that, of course. I mean, but
Right.
the truth of the matter is that it's rigged, and it's being pushed down to keep people from noticing that there's an actual real problem, because that's gold's job, is to say, hey, look at me. I am broken.
Yeah. And 2 points to that. First, I would argue that that's the correct answer, although the answer that a lot of people gave, especially in both gold and silver, but we'll look at silver for a second. People were saying you had a lot of margin calls.
Yeah.
Institutional investors were selling SLV and the ETFs. At least the data does not support that, because here you have weekly transparent silver holdings This is SLV plus. There are a few other silver ETFs. Amazingly, Deutsche Bank owns one, which, geez, you gotta be. I don't know which is worth it. Deutsche Bank silver ETF, who got caught bragging about rigging the prices, or SLV, where JP Morgan's the custodian. Yet in either case, here you can see almost 15 million ounces added 2 weeks ago, and then 25 million. So you can see this right as the price is getting destroyed here. You have a surge. I mean, we've heard the reports of, and of the bullion dealers. One after another has been pretty consistent around the globe. But here you see a lot of metal, and that's looks like a ballpark that about 40 million ounces.
Yeah.
Put in perspective, I'd have to pull up a different chart, but Ted Butler, in an interview I did with him a while back, mentioned that what he felt was the driver for the surge to $49 in 2011 was that you had 60 million ounces added to the SLV. Now here, if you look back to last June when the rally started, we were at, let's call that $1,010,000,000 right around here. So let's call it 1010. You've added almost 170 million ounces in the past year. So if 60 million ounces drove it to $49 in 2011, we've dwarfed that. And so the idea anyway that this is just people selling SLV or the ETFs does not seem to match the data to me. Where that silver is coming from, that remains the mystery question. I'd sure love to know, although it sure seems like it's going to be hard to keep pulling this off, especially with what's going on in the world. I mean, if you had the Fed tightening, raising interest rates, undoing balance sheets, then maybe you could see it differently. But they just printed 625 billion in a week. They did in 1 week. They outdid the entire 7-month QE2 program. And I think perhaps because this has all happened so fast, it's like you've had 2007 and 2008 baked into 4 weeks. So it's almost impossible unless you're someone who's watching your show, who's been studying this and expecting it. But I mean, this stuff has happened really quickly.
Real quick.
And like you said, we have seen a divergence with the paper and physical because, if you want actual gold and silver, that has held up. And even for all of the stock market down days, 1,000, 2,000 points down, where's gold today? 1620-ish or somewhere around there. So it even touched 1,700 almost last week. So yeah, there have been some days where we've seen surge in demand, yet the metals get pummeled. Yet even despite that, I would assert that gold in particular, maybe not silver as much, but gold has held its role. And certainly when you look at what's happening and what you could expect going forward, as well as what is the order flow doing? People are buying.
Yep. It's going to, I think that it's going to continue to go up. And I think that the COMEX is going to become less and less relevant to the physical market as the days go by, especially if this lockdown situation continues to exacerbate all the physical market in the way that it already has. If that trend continues for another 6 weeks or so, it's going to get ugly out there, period. I mean, we're going to see that the physical market no longer cares what the COMEX has to say. It's just like, we don't know what you're doing over there, so it doesn't matter. We have our thing going on over here, and you do whatever it is that you're doing over there, and it's all fine. Because that's what's going to have to happen. Because I'm not going to sell as an entrepreneur, as a capitalist. I'm not going to sell a product for $100 when I can get $500 for it. That's just not the way. That's not how it works. sorry, that's not one of the laws of economics are called the laws of economics for a reason. They're not called suggestions or ideas or concepts or, or perhaps maybes. They're called laws for a reason. And those laws are about to make themselves known. And you put me on the spot the other day, and I'm going to return the favor. What do you see on June 1st? What's the price of gold? What's the price of silver? June 1st, 2020.
Geez, June 1st. So we have April, May. So that's about 2 months away.
Yeah, you got about 9 weeks.
Well, I'll give a slightly different answer because maybe it's from the option trading background. I look at things in terms of probability.
No. We want a hard and fast. We don't want some concept idea. We want some capitalism going on here. We want some laws of economics.
I'll give you the answer you want. I mean, the way I see it is that you have a situation where a short squeeze has been made inevitable. So probably the price of metals will either be sitting right around where they are or just multiples higher. And that's, again, I'd love to give you a straight answer, although I'll give you the most accurate one because I understand people do a disservice when they say silver is going to $50, tomorrow's gold's going to 2,500. But if we are at that break point, and there's been rumors floating around of, is there going to be a failure or closure of the COMEX? We've heard some speculate closure of the stock market. So that would be my answer. We'll either see them pretty much sitting right around where they are whenever that break point is, which could, the way I've looked at it for the last 8 years almost, it could be tomorrow, or what I think is relevant, rather than being a gold and silver cheerleader, what would be of value is that structure your investments so that it doesn't matter.
There you
You know,
go.
if you're
I
going
like
to
that
work and
answer.
you have extra money coming in, then, you know, if your expenses are X and you make X plus Y, geez, I mean, there's a lot to be said for, you should be thrilled that the price is this low, where you can see something that has to move in the same way that those who studied the mortgages, as you saw in The Big Short, they saw something that had to move. They didn't know when. So again, to me, physical bullion, or for the folks who get into mining shares, pick companies that have a good balance sheet. I don't know.
Yep.
What we're really pricing here is how the government or the banks can change the rules. The Hunt brothers weren't wrong. They just had the rules of the game changed. Similar to what happened in 2011, and you see the margin requirements getting changed every day now. I understand some people are tired of the wait. On the other hand, it makes sense because everything government does, pushing people around in Iraq, doing, implementing democracy, despite that the U.S. was specifically designed not to be a democracy, installing that, and all this stuff stops when you can't print money. So just assume that the banks, the government, anyone who's making a profit off of this, which I think it's safe to say we've seen as a profile of people who are willing to break the known rules, they're going to do what they can. The devil's going to fight with every trick to keep himself in the game. But at the same time, the longer you delay it by putting more paper on, the higher the counterbalancing reaction will have to be. So by all means, Rory, as soon as I know or see a smoking gun that says it's happening this week, I'll be happy to come on your show and tell you. If essentially that's what I've spent the past decade of my life doing, is studying everything so that when there is a conclusive it's happening now, so if there is a conclusive it's happening now, that I'd be ready and be able to see that. So in the end, though, I don't know how important that actually is, where if you just leave your gold and silver, whether silver is $14, $20, or $2 tomorrow, you still have these dynamics with the Fed doing what it's doing. Shortages in the market, a surge in demand, and perhaps having the patience to see it like that is what's required to get the kind of success like they had in The Big Short. but you can make it easy. You don't have to lose sleep over this. And again, other than that, you just watch Rory's show and you're in good shape.
I'm very relaxed at this point. I mean, I don't have anything in the equities markets. I don't have anything in the paper mill whatsoever. I have nothing in it, and and I'm okay with that. I really am. And some people are like, "Well, you've missed out on all these gains." It's like, yeah, but I don't have any of the risk. I have any of the risk that goes along with it. And when Obama introduced Myra at the State of the Union when he was still occupying the White House. They introduced Myra for a reason, and that's my IRA. There's a reason for that. That reason has just been unleashed. It was called $2 trillion in bailout money. It was called $6 trillion in about 2 weeks, is what they actually announced. I mean, it's ridiculous. You were talking about the volume of money printing. I mean, it's exponential. They don't even know how much they printed at this point. I believe. I mean, it's just every time you turn around, it's like $1 trillion here, $1 trillion there. Bail out this company, bail out that company. And Trump, I support him where he deserves support, and I criticize him where he deserves criticism. He stood in front of the American people, and he harped on Bernie Sanders and his socialism and said, socialism will never be in America as long as I'm president. I don't know about you, Chris, but printing $2 trillion on top of ZIRP, zero interest rate policy, sounds a whole lot like socialism to me. I mean, I don't know how else to describe it. I mean, I know I'm going to make a lot of people mad, and yeah, but we need that money, and we need this, and we need that. No, we need free market capitalism to correct the situation that we find ourselves in, and it is crony capitalism and socialism that has gotten us into this position. Period. I mean, when the Federal Reserve System was born in 1913, everything changed. Our republic was no longer a republic, and it's just gotten worse and worse ever since. And now we find ourselves here. And when you asked me the other day what I thought that gold would be, where I thought gold would be on June 1st, I said it would be north of 2,000. Well, it's already north of 2,000, so I win. It's already, if you go try to buy a gold eagle right now, a 1 ounce gold eagle, and tell me what you're going to pay for it. Well, I just told you what you were going to pay for it over at APMEX, and you're going to have to wait till April 15th if you're lucky. And that's not even for a 2020. That's for a random year. That's for whatever they get that rolls in that somebody sold. That's what you're going to get. So it's not even, and you asked me about silver, and I said I wasn't going to answer about silver because that market is completely different than the gold market, and it's so jacked up at this point that nobody knows what's going to happen with it. And it's so I would never say that silver is going to be X price or X dollars or whatever. I would never say that because it's an unknown. I mean, right now premiums are running right around 100%, I believe. I think that silver eagles are about $22, $23, $24 if you go to buy one. It's not quite 100%, but it's pretty close. And it will be 100% pretty soon. That I can say with confidence. And if they keep beating it down, it had a $13 handle on it overnight last night. So, they were able to take about 60 cents off of it in the overnight market, and it's come back a little bit. It's got a $14 handle on it right now, but you're not going to pay $14 for a silver eagle. There ain't no way. You're not even going to pay that for anything. You go out on eBay and look at those prices. It's that's where the free market is, and that's where in the future you're going to be getting. That's where we have always gotten our products from. When have you ever, Chris? When have you ever gotten anything off the COMEX?
No.
No, exactly. Because that's not our market. That's not where we are acquiring gold and silver. There are a few people, I know Cranesler's gotten some from the COMEX, and I know that Gerald Salente got some product off the COMEX a few years ago, and both of them had problems.
Yep.
I mean, and right now, if you and I call up our favorite local coin dealer or online dealer, be it SD Bullion or whoever, I mean, it doesn't matter. I mean, you're gonna run into problems. You're gonna run into delays, and then the way that James Anderson described it is like, yeah, you got to give me your money now, and then in a few weeks I'm going to send you product, and that's how it works. And if you don't give me money now, then the price when you call me back tomorrow after you've thought about it, price is probably going to be higher. So it's, or I don't know. I mean, I think that, first of all, I think that weighing it in dollar terms is not realistic. I would rather measure it in acreage, or because that's what I want. I want acres. I want land. I want something that I can swap real goods for real goods, and not paper equities or paper illusions. So I don't really care about dollars.
Yeah, and it makes sense where, again, I know this isn't the answer people want to hear yet. If you just sit there and leave your bullion somewhere safe, who knows? Maybe a month from now, this scare passes, metal's found somewhere, Corona's gone, and the premiums come back down. It's possible. I'm not sure that I think that's going to happen, but even if that did, you'd still be in a world where the Fed can't even tell you how much they're printing. And I'd point out, Rory, as you well know, even whatever they do tell us they're printing, there's usually a lot going on behind the scenes that we don't know about. So there's no, I challenge you or any of your listeners to find someone who can explain how the Fed will ever be able to undo their balance sheet, undo the printing. When are they going to raise rates? 50 years from now? Possibly, maybe. If the Fed, it just seems to me like they're losing control now, where you toss in $1 trillion into the markets and the stock market's down 2,000 points, and then you come back a couple days later and toss $2 trillion in, and that's the plan. So I
Yeah.
don't know. Maybe by June 1st we'll have $75 silver, or maybe it'll be $12. But I can't see any circumstance on June 1st that even if silver were $12, somebody construct to me the scenario. I don't see how you could do that in a world where supply is going down, demand, unless, because the people who actually own gold and silver, they're not selling at these prices.
Right. Exactly. Very few. Very few.
Very skewed dynamic to the investor profile, where it's not like Tesla, where some guy's like, hey, I made 10% today. Great. I'm going to go, celebrate, get a nice dinner. Where your average gold and silver investor, if they still have metal at this point, they're probably not giving it up easily, let alone anywhere around these prices.
Right.
And that's the thing with trading, where if you wait until silver goes to $50 to buy it, well, then it's too late. You can't second guess it. You have to place your bets beforehand.
Now. Right.
Although maybe you don't even have to place a bet. Just if you don't want your dollar, you know the dollar is being printed. The Fed told you that. They said 625 billion last week. Who knows how much this week? So you know that's being devalued. Yes, Wall Street, the government makes it kind of hard to just live your life and not have your wealth stolen. Although gold and silver, to me, remain the best ways to do that. And probably sooner than later, you will be able, the price of things in terms of your gold and silver, rather than needing 3 ounces of silver to buy something, maybe you'll need a quarter of an ounce, is how I would look at it. And with what's happening in the world, it's great. You can put it there, leave it. You don't have to look at it. Just let Bernanke, Yellen, Powell, whichever guy they stick in there next, do what they do. And every time they print, you're winning to that.
Exactly. And we, I think that we've been short-sighting ourselves, Chris. I mean, we're using June 1st of 2020. I mean, and you said describe a scenario that's going to on June 1st, 2020, where things are going to be different. Well, what about June 1st, 2021? What about June 1st of 2022? What's going to change? I mean, these guys have just, and when I interviewed James Anderson, if you guys haven't listened to that, you really need to go listen to it. It's really good. He is a wealth of information. He pointed out, and rightly so, that when Hank Paulson and Tim Geithner and the other criminals held the world hostage and said that if you don't give us the $700 billion, there's going to be martial law and tanks on the streets, and everything's going to go crazy. So we ponied up, and they said we need $750 billion. Gave them the $750 billion. Turns out, according to James Anderson, it's 29 trillion, 46x increase. So using the same dynamic, they did 2.2 trillion, comes out to somewhere around 240 trillion.
So you're saying that the latest stimulus package is already up to 2.2?
Yes.
Added a 0.2.
Yes. That was added like before they even got off the floor. It had grown to 2.2. So
and that speaks to exactly what you're saying. I'm sure by the time it actually goes into implementation, it'll be publicly stated bigger than 2.2. Yep. God only knows what the real number is. And right. I haven't read through it yet, although I've been seeing reports that there does appear to be an awful lot of pork product in that bill, where Kranzler was saying there's $450 billion for the banks, and it's makes me hope that, I know there's some folks that wonder if Trump, is just saying this stuff and in reality he's busting up the deep state. I don't know. I kind of hope so.
I do too.
I very much hope so, because otherwise what's happening now is to me, it feels like someone knows this is over, and whether it's people are raiding the ship or someone's transitioning us to something new, but you're at the point where, on any logical measures, I mean, this ship is sinking now. And hopefully Trump is really playing this sophisticated game of chess, leaning slightly more towards believing that might be possible. Who knows? But in the end, back to the gold and silver, I mean, it's not rocket science. It's just more, do you remember to go for your run in the morning or do your exercise? It's more the habit and the mindset. Easier some days than others, but again, that's why I appreciate what you do, and this is why I do similar.
Yes, and I appreciate all the work that you do too, Chris. I mean, it's been a real pleasure getting to know you over the past year or so, and it's I'm really excited about the fact that you put this book together. You've talked to a lot of really incredible people, and that make up the book, and I'm looking forward to reading it. And if you would let people know how they can grab a copy of it.
Sure. Well, I sure appreciate that. Appreciate you joining me last week. We did a silver release party on Friday night. Yes, I've done a book called The Big Silver Short, which basically was done in interview format, similar to this, but with the intention, everything was specific to silver and all of these dynamics we've just talked about, and why I do feel we're set up for the short squeeze of a lifetime. Andrew Maguire was interviewed, Ted Butler, David Morgan, Rick Rule. Basically, I went to find the smartest people I could in the silver world to see if I was imagining everything I was seeing or if this is really as wacky as it's become. And apparently it is. And, as you can see, the title, The Big Silver Short, similar to The Big Short, because I've felt like for the last decade, we're seeing part two play out. So, Rory, I'm going to get you your copy tonight. Audiobook ready, print version on its way. But if you go to arcadiaeconomics.com, and then you click on this tab here, The Big Silver Short, you can pick up an audio copy now, because I think it describes what's actually happening and unfolding now, where, we would talk about how there's 500 to 1 in terms of how many claims for each ounce and how that has to get resolved at some point. And looks like it's happening now. So I think the book is timely. Also, a lot of great history in there. Hunt Brothers, Warren Buffett, what happened in 2011, and really answering that question of why I think there's a lot of people that bought gold and silver in response to QE all the way a decade ago, and they've on paper lost on their trade so far, which I think they made an intelligent trade, and the banks did some stuff that's clearly against the law. But rather than focus on what's fair or whining about what should be, just tried to lay out as clearly as possible so that my mom could understand it. So that someone, you don't have to have a finance background, but if you want to be prepared for what's happening, here's the roadmap. And Rory, I just appreciate you having me on the show to share that, and I'll get you your copy soon. But good stuff happening.
There is good stuff in the midst of the storm that is happening, and this conversation is one of those things, helping to keep people informed and on track as far as what's going on out there. I mean, it's I really, like I said, I really appreciate the work that you do, Chris. I think that you have a really great mind, and one of the things isn't the last interview with Bart Chilton, and that included in this book also?
Yep, that was the reason I even thought to ask Bart, because I wanted to get to the heart of these issues. And certainly, Rory, I know you've heard that interview before.
Yes.
What
Incredible.
he revealed was stunning.
Yes.
And I think the book paints a very complete picture for people who want to know what's going on and how to respond intelligently. And that was really the purpose of it, so that, it was all in one central document, easy to read, jokes mixed in. We get some Bernanke jokes and keep it fun and not, the world's going to collapse, but just
Right.
what's happening. Here's how you can be prepared.
There you go. Well, all right. Well, we'll leave it right there, Chris. And don't forget to go over to arcadiaeconomics.com and order your copy of The Big Silver Short. Chris, thank you for all your time today, and look forward to speaking with you in the not too distant future.
Sure appreciate that, my friend. Talk to you soon.
All right, buddy.